Hey everybody, my name is Corrado Randro and welcome to my channel. In this video, I'm going to go over Chamath Palihapitiya's interview with Scott Wapner from CNBC, and they talk about the GameStop short squeeze. I was going to post this video about a week ago and I got a little busy, so I found this interview very interesting, so I wanted to share with you guys if you haven't seen it already, especially if you're a new investor and you never bought stocks before in your life and you heard from maybe a buddy or a friend that's buying GameStop stock. So it's important for you to watch this video to get a better understanding with what's going on with these guys on Reddit called the Wall Street Bets, and Chamath really explains it really well, and so check out this video. If you happen to like the video, please do me a huge favor and smash that like button and subscribe to my YouTube channel. That would mean the world to me. Also, down in the description, I do have a link to Webull. All new users will get one free stock worth up to $2.50 to $250 after you open up an account, and one free stock that could be worth up to $8 to $1,600 after you deposit $100 in your account with my referral link that's below in the description of this video. Also, Webull fully supports pre- and post-market hours trading and free contract fee and zero-cost option trading. For those of you that don't know what's basically happening is that there's these hedge funds that have shorted GameStop and a bunch of other stocks as well because they believe that they're overvalued and they should be going bankrupt, and GameStop is one of them. Basically, when you short sell a stock is when an investor borrows shares and immediately sells them, hoping that he or she can scoop them up later at a lower price and return them to the lender and pocket the difference. But shorting is much riskier than buying stocks, or what's known as taking a long position. So there's all these hedge funds that have been shorting certain stocks, and now there's all these retail investors on Reddit on a group called Wall Street Bets, which is basically saying we're the little guy, like the David and Goliath story. So these people from Wall Street Bets are like, you're not going to take us down. You spent so many years taking advantage of the little guys, and we don't believe that these companies are as undervalued as you say they are. So basically, all these people in the group are coming together and saying, hold your GameStop stock and don't sell it back. And by not selling it back, the price will then increase, and that's what the short squeeze is. Then the short sellers will have to buy back the stock at a higher price, then it creates this snowball effect that the price keeps increasing. Short sellers will then have to cover, and then they have to keep buying the stock, and the price keeps going up and up. All these hedge funds have been taking advantage of retail investors for a really long time. What they do on a day-to-day basis is what Wall Street Reddit group does. They get to send out these price targets, they get to say whatever they think and what the value of the stock is. They get to announce that they're shorting a stock, and all those things and price predictions move markets. And they push these ideas onto retail investors, and they get to reap all the profits, and a lot of the time retail investors get hurt. So this is kind of flipping the situation. The hedge funds are getting hurt. Some of them have even gone bankrupt, where the retail investors and normal people at the bottom are the ones causing this to happen. So now I'm going to play the interview with Chamath Palihapitiya and Scott Wapner from CNBC.
Next guest, he tweeted on Tuesday that he'd gone long through call options. Chamath Palihapitiya is the CEO of Social Capital. He joins us now on the phone. Chamath, thank you for being here.
Hi, Scott. How are you?
I'm good, thanks. So you tweeted yesterday that you bought $115 calls in GameStop. Can you tell me what your position is as of this very moment?
Yeah. Can I tell you a little story before all of that, or no?
Why don't you tell me that first, and then we'll go from there.
So this morning I woke up after spending all last night in Wall Street Bets, reading about all of this stuff. I ended up closing up my position this morning, and I wanted to announce that I'm taking all the profits that I made, plus my original position. So I'm going to take $500,000, and I'm going to donate to the Barstool Fund for Small Businesses. But I really want to tell you, beyond the $500,000 donation or the money that I invested, which was, not a huge amount in the grand scheme of that stock or the entire market, what I learned, because I think what I learned over the last couple of days is important for everybody that's watching CNBC.
And that is?
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wall Street Bets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes, their parents lost their jobs, and they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell. I think that what it proves is this retail phenomenon is here to stay. There are 2.7 million people inside of Wall Street Bets. I think that they are as important as any hedge fund or collection of hedge funds. And I think the most important thing is that in a world of zero interest rates and quantitative easing, I don't know how you can run a typical hedge fund strategy and make money anymore. Because, for example, when you looked at GameStop, a normal person would say, how can you have 136% short interest? How can you be short 40% more shares than actually exist in the world? To a normal person, that doesn't make any sense. But to a Wall Street mathematician, that's the game that has been played for years. And that game came undone.
Well, that may be somewhat of an extreme example. Let me just go through a couple of things you said here. I have a hard time believing. You suggested that there's a good amount of fundamental research going on underneath the GameStop Reddit situation. Do you truly believe that there's actual fundamental research? Not to disparage in any way the people who are actually making these trades, but this seems to be momentum rather than a deep fundamental analysis.
Scott, there's momentum in traditional hedge funds and how they move stocks as well. But it's really disparaging if the starting position is these guys can't do the same quality of research as an analyst in a fund. That's just not true.
I didn't say that. I didn't say they can't do that kind of research. I'm questioning whether they're actually doing the research when it comes to things like GameStop and AMC and some of these other things.
There's a distribution. And obviously at one end, there are fundamental analysts. But on the other end, there are momentum traders that follow trends. But by the way, the dirty little secret of Wall Street is that exists in hedge fund land. The reason why this GameStop trade has caused so much pain is because at the top of the pecking order was Melvin Capital. Those guys were incredible stock pickers. They are incredible fundamental modelers of companies. Okay, Gabe Plotkin is one of the sort of giants of our era, of my era, right? But at the end of the day, what happens is, irrespective of what he puts on, his trades are mimicked and copied by umpteen other hedge funds that follow along.
The bottom line was that Chamath was pushing that the hedge funds had an advantage for a really long time until now. But with social media where it is and a bunch of retail investors with a cell phone can take the other side of a trade and be effective at it. Scott can accept that this is a strategy and has nothing to do with the underlying fundamentals of GME. Yes, people are going to get burned, but it's a move in the market that you can play. Thank you for watching the video. If you have any questions, please leave them in the comment section below. And don't forget to smash that like button, subscribe to my YouTube channel, and if you're interested in opening up a new Webull account, use my referral link in the description of this video, and you can get up to 2 free stocks that are worth over $1,800. We'll see you in the next one. Adios! Hey guys, it's Corrado. If you want to watch more videos, just click over here. If you want to subscribe, which that would make me really happy, just click over here. Have you subscribed yet? I need an espresso.